Do you trade every day, hoping today will be one of those good days, trying to let the good days outweigh the bad? If so, this video is for you, because over the past few months inside my Discord, I've called price correctly and pinpointed the exact times to trade, showing consistent results. And today, I want to share exactly how I determine those high probability times to trade and when it's best to step away from the market. Before we dive in, if you find value in this video, help me reach my goal by giving it a like. It helps me see what you guys want to learn and help support my mission to grow and spread free education to as many traders as possible. So make sure to watch the whole video, subscribe if you haven't already, so you never miss out on the insight that can make all the difference inside of your trading journey. Let's get started. When discussing high probability versus low probability setups, it's essential to understand that many traders misinterpret how ICT's trading approach functions. The focus shouldn't be on chasing the mirage of annotated PD arrays or standalone patterns. It's not about pinpointing ultra-specific entries based solely on layered technical confluences. It doesn't matter how many FEGs, order blocks, mitigation blocks, or whatever you stack on each other. You're looking completely in the wrong place if that is your main strategy. What ICT really emphasizes is trading through a narrative, and this is a framework that guides price movement. The PD arrays are there to support that framework, and they do not define it. They're footholds, helping traders confirm alignment within the narrative, but they should never be the sole reason for a trade. This is where many fall into the trap of trading low probability pattern-based setups. Understanding this order of operation is crucial. The arrays are secondary. Like a mapped path along a mountain route, patterns are a starting point for beginners, a tool to teach foundational concepts. But if you're trading PD arrays and patterns for the inherent value without context, or you're layering excessive confluences by zooming into smaller and smaller time frames without a narrative, you're setting yourself up for complete and utter failure. Before any analysis or setup, you need a clear vision of where price should head and why. Without that directional understanding, along with a time-based understanding, any technical tool or pattern will be completely irrelevant. You've already failed before you started. This isn't an introduction to turtle soup, but if you don't understand your narrative, you might as well be on the introduction stage, because you need to know why some setups fail. You need to understand when there is a misalignment with market conditions and understand poor timing and misreads of liquidity levels. Obvious situations to avoid low probability setups are the following: within choppy market conditions, lack of momentum or strong directional bias, or when price is consolidating around a key level without a clear breakout. Low volume sessions, Asia session with low volatility, post news events when liquidity dries up, and major holidays are thin liquidity conditions. Simple misreads of market context can be the following: when a turtle soup is likely to fail, when high time frame PD arrays have not been respected, when there's unclear market structure such as an MMXM setup has not been confirmed, an FEG has not been filled, indicating lack of follow-through on liquidity grabs, or price not aligning with SMT divergences or time-based manipulations. Avoiding bad trades could be way simpler than you think. Always think to yourself, what is the time of day? Am I trading the New York AM session? Is it lunch? Am I trading lunch for some reason? Or is it the PM session, London, etc.? You want to stay away from low volatility environments such as the Asia session or before the London session. You want to watch for increased volatility during your liquidity sweep, such as displacement outside of the range followed by displacement back inside of the range. You obviously always want to monitor time in your key manipulation time, such as London Open or New York Open, to improve probability trading the manipulation / turtle soup. You always want to try to avoid late day setups or setups outside of key manipulation windows. It's pretty simple to make a checklist for a high probability turtle soup setup. You just want to confirm the high time frame draw on liquidity and ensure price is moving towards a clear liquidity target. You wait for a strong displacement, and if price lacks force after the liquidity sweep, it's most likely low probability. You want to check your time and market conditions, as well as line your entry with the key session, such as, like we talked about, the New York Open or the London Open, and avoid setups when price is within a balanced range or there is no clear manipulation present. Obviously, when we're chopping up and down, you don't want to trade inside of the range. Wait for one range end extreme to be taken, and then return back inside of said range. For a quick conclusion, it's very simple. Just stay disciplined. Only trade high probability setups that align with market conditions and times. Keep reviewing charts for patterns that lead to failed setups and learn how to avoid them. Always learn from your failures and review your losses to build up your ability to avoid low probability turtle soup conditions. This week inside the Discord, I caught my biggest trade ever, as well as we can see inside the analysis here. We can scroll up and we'll see that I actually called out a pattern in real time. So we called here with low resistance to the low. We've turtle souped the high, even left a fair value gap displacing above the high. But what did we not do? Short this. Okay? You can't pattern trade this. You have a 1 minute pattern and a 1 hour rebalance candle, as well as the 15 and 30 minute looking strong, as we can see here with this 1 hour candle open low into our previous down close candle, shooting price higher with our open low inside of the hour, using that previous day high and our lower time frame breaker / order blocks to push price higher inside of these higher time frame wicks. That's what lies, is those low time frame order blocks and breaker blocks. Hopping onto the chart, we can see in this is that same piece of price where we put the pattern for the turtle soup high, us accumulating, manipulating, but where's following through with the distribution? So we can see that in fact that is because it is a pattern, and that is why it fails. So why overall did it fail? One, this being a Wednesday, we have a high probability expansion day with the weekly / daily profile and how we've been delivering. You can check your own chart here to understand, this, as well as us delivering from the SMT, turtle souping these lows, as well as on the higher time frame, us liquidating our previous month / week lows, SMT, and delivering higher. So we can see in our most high probability day, Wednesday, for a continuation day, our daily open here, we opened, chopped, manipulated, and went lower. Why did we not need to take out this low resistance here, right, with our trend line before moving higher? As we can see, with our internal to external, we balance this 5 minute and this higher time frame price action here with a higher time frame breaker / order block here. And I get we're on the 5 minute time frame, but I'm not trying to hop around, so you'll just have to stick with me. But obviously you can see as we displace past this and reaccumulate above the old high on a higher time frame, we're going to be leaving a fair value gap to confirm the displacement that we're going to be moving higher. So we can see on the 5 minute, like I said, we went internal to external, internal with this fair value gap after displacing, using our previous down closure candles to support price higher. You don't necessarily have to catch this one, but what we understand here is that the lower quadrant of this fair value gap will be left unfilled to continue delivering higher. What makes this actually work? Right, you'll see this almost pattern of us, what I see as a pattern, because I know it works, of us having this internal, external, us reacting to the order block, and then continuing, right? We have lows that we went internal, then back external here, and then use these previous down closure candles to support price higher, even after a low time frame turtle soup here, and then delivering higher. And you can see it over and over again. Oops, let me get that one off. Right, we break the high to the left after moving internal. What do? Order block, higher. We break the high, internal, breakaway gap lower to keep continuing to push us higher. So we have an order block that we're trying to short through. And we see what it's followed by, or that it's followed with displacement and why. You're not going to get why it's a high probability condition from the 5 minute chart. That's when we hop to the 4 hour and talk about and understand where and why we were delivering from how we talked about right at the beginning. We can see, like we talked about, we had our big break lower, big false market structure shift lower, and we were able to read this short actually and take it and use this low resistance after we saw how we rejected, where we disrespected, and how we reacted. So we can see the same thing here. We can see we come in past our key lows, being these lows, our previous month and week low, where we had a SMT divergence. We see how and why we reacted to those key lows and how we displaced from them. Like we saw earlier on that higher time frame, we have our fair value gap like we talked about, displacing past our order block slash breaker, right? With an SMT at this low, you can see it in the sense of us accumulating here, making a higher high, lower low, then a new higher high, swing low. Clear breaker here with displacement. And you can also see our market maker buy model with the sell side of the curve into the buy side of the curve. Let's take all those drawings off. And you can start to also see how we started to reaccumulate. And I get, in a sense, moving internal to external here, right? We were maybe able to read this, but you don't have to trade this, right? Especially inside of here. This is low probability conditions, right? On a 4 hour where we get 1, 2, 3, 4, almost 5 candles inside of the previous one, closing inside. We can see that's a Friday after a large weekly range expansion. Okay, so we come into this week, right? Friday, NFP chops back inside the range to where then Monday, after our Sunday open, breaks lower into a Tuesday daily open here, 6, right, where we open low. SMT this failure, anticipated failure swing inside the turtle soup, and then continue to deliver higher. We see at no point on the higher time frame did we ever close back inside, outside of the range. And if we even look on an hourly here, right, we can see almost our accumulation, manipulation into our distribution. Higher time frame fair value gap here pushes us higher. Very beautiful in the 1 hour, delivering into the 1 hour order block that we closed above. And then just continue to deliver bullish. So we can see that same type of pattern we see here, right, continues to deliver here, right? If we look at it like this, we use this accumulation range, right? Obvious accumulation of the sell side of the curve, right, inside of, our next accumulation. And what do? We use those previous down close candles to then support price to move higher. We can see internal to external, and what does price do? Use the order block, deliver higher. What does that order block have? A fair value gap, internal, external, right? The narrative and the following of price stands here, but it's because on the higher time frame, right, we've literally done that. Internal below the lows, SMT, shoot higher. So we can see inside of this low to this high, this high, right, where would we be delivering from? An OTE of the range where we failed to close OTE, right? We tap it perfectly in almost just, 1-2 days, and then blast higher. Also, technically, with that low being taken daily 2-day CRT, if you look at it, here, right, with that SMT at the low, 1, 2, pretty decent there. I don't really use CRT though. Like I said, I just showed you an A+ turtle soup setup, and now you can follow that for any low that has been taken out. And then you just need to understand, after a low is taken out and we don't reject, why did we not reject that key low? In a situation here, you can see that we did the same thing, but what did we end up doing? SMT in the high, leaving equal highs. Sorry, let me put on the right high so we can show the equal highs. Right, putting in equal highs. SMT, see we also have an FEG, even the FEG from here, along with the SMT. Right, there's, a couple reasons why, you could have caught short there. Also, a lot of reasons why you could have been married to the equal highs. You have to have the narrative, the understanding of why we're rejecting where, when, and what time, and as well as what areas of price have we mitigated to then move higher, to then push us lower, right? We can't just fall through this balanced area of price, right? It's moved internal, displaced external, right? This order block, breaker block, however you want to see it, mitigation block, is very strong, and it's going to have, like it says, some type of mitigation. we tap into it, it pushes us higher to then push lower. Because we've already tapped it, we've mitigated this area, price then can slice through it because it's been mitigated. I'm going to end this one here. Hope you guys really enjoyed this one. A lot of you guys don't understand high probability versus low probability conditions, and I see you guys trading every single day. Be sure to like the video. Also, leave a comment if you made it to the end. Be sure, if you need to as well, to check out the other videos on daily bias, market conditions, and building a narrative. If you need any other help, the Discord link is always in the top of the description. And until the next one, I'll see you guys later.